Hi, welcome to this video today, which is on the 1st of August. It's Sunday. We're just going to take a look at some trade setups the week ahead, which we think could offer really good risk-reward trade setups. Now, in terms of this video, I have titled it Best Forex Trading Strategies 2021. For anyone new watching our videos, our belief is technical analysis should be very simple, and our technicals are when we go to the charts in a moment. But if you want to catch the really big moves in the market, you need to know the fundamentals and sentiment towards them behind the chart, where the big money is sitting. Then you can get an edge. If you're trading just purely price action, you'll get caught out a lot of the choppy price action that's been around, and also you'll never have the confidence to hold a big trend. Now, when we do our sentiment and fundamental analysis, it is very simple. Our technicals are very simple as well. What we will do now is we will go to the charts, but just before we do so, please do keep in mind it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 FX pairs, just click on the link beneath this video and you can get live access to our member center. You can also follow our Facebook page, join our Facebook group of traders, and finally check out our Recommended Regulated ECN broker. Now, in terms of charts, I've been updating them this weekend, so I'm just going to use the charts from our member center. So let's go over and take a look at them. Right, just before we go and look at pairs, individual pairs, just want to go through a quote here from a very influential Fed president that came out on Friday. It's James Bullard, the St. Louis Federal Reserve president. He's highly influential. Now, in terms of the dollar sold off a bit after Wednesday because people said, well, the Fed are going to keep doing stimulus. They're in no hurry to dial it back, okay? Bullard is actually saying financial markets are very much ready for a taper of stimulus, noting that he preferred to begin the process of scaling back on the Fed's $120 billion a month in treasuries and mortgage-backed securities this fall, okay, and finish by the end of the first quarter of 2022. Now, in our view, the Fed will basically warm the market up for a cut in stimulus at the Jackson Hole meeting of central bankers in August in Wyoming. They very often given important policy statements at that meeting. I expect them to do the same. The market is not expecting them to do this. In terms of the market, they think the Fed won't start until next year dialing back forecasts, with most forecasters looking for the end of the first quarter for the start of tapering of stimulus. Okay, if that happens, it's in the price. But if it comes sooner, that's heavily bullish for the USD. And if you look, the USD didn't fall back too much after the Fed. I just view it as a normal correction. I just think, yeah, market does have to have corrections. And if you look at the big picture, the dollar bull trend is intact, and so is the Japanese yen bull trend. Now, in terms of USD positioning, we've been focused on this for a good while. Market was heavily short the dollar at the start of the year. In fact, this asset manager short position here, where I've got my cursor bottom right, was the biggest ever. And we were expecting speculators heavily short the USD to start coming out of those short positions on stop. Okay, and you can see, obviously, they have started to come out of their short positions on stop. These two groups here are flipped long. Just non-commercials and leverage funds. Asset managers, though, huge group, expecting them to catch up and go net long. These groups to expand their net long position and push the dollar higher. In terms of stimulus, yeah, there's no reason for the Fed to delay too long. And there was important data out on Friday, which was the PCE, which is the Fed's preferred measure of inflation. Okay, and what you can see, 1 year expectations for inflation are really, really strong. Okay, over 5 years, not so strong. But can the Fed let inflation run out of control for a year? Fed Chairman Jerome Powell has said, yeah, the Fed will be patient. He says he thinks inflation is transitory, but it might not be. It's kind of mixed messages coming from the Fed. There's a lot of pressure within the Fed to cut back stimulus. I think the market's being complacent. Okay, so looking for the Fed to roll back stimulus quicker than expected. If they don't, it's in the price. Also, we have the dollar in an uptrend. We have seen weakness in Chinese equities. I think we might see some more weakness. We did get a bounce. That could spill over to other equity markets, despite the fact the S&P, Nasdaq, hitting multi-year highs, just so extremely overbought. Seasonally weak time of year. If stocks come down, that will give the dollar and yen an additional boost. They're safe haven currencies, and despite the fact the stock market's been strong, dollar and yen have been strong. So I take that as bullish for the dollar and yen. And we shouldn't just be looking at the dollar side of the equation. We should look at other individual economies, which I'm going to do now as I discuss the charts and pairs. And I'm going to start with Euro USD. First chart, it's Euro USD. Now, in terms of the euro, we did get a really good entry in at 122.20. We saw a really nice fall. And I was expecting an acceleration to the downside, but we haven't really done much. We just had a little bit of a rally back to 119. Now, we've did two trades in this one. We took some out at 118. We've still got one trade left in running. Okay, with a tight stop at 119. Sorry, where is it? 119.20. We've got targets of 117. Then we're looking for big monthly support levels, 116. 114. Okay, so if we go and look at Euro USD on the weekly chart, we're looking to get down to here. If we break 117 pretty quickly, then you've got a big supply and demand zone down at 114. Okay, this is a weekly chart. I'm not sure if I said that. Could possibly run on down to 110 longer term. The fundamentals in Eurozone are just so dire. I mean, we haven't really done much here. This volatility very low over the last month. In fact, it's been the lowest in over a decade. Just bringing this chart up from the market here. So not much volatility, but I think it's going to pick up. So we should be aware of that. And I think it's going to be to the downside. Limited upside and a lot of downside. In terms of limited upside, why? Speculators are still heavily long the euro, despite the drop from 122. Okay, I think they're going to change their view, come out and stop and sell the euro. Now, in terms of this trade, our stop is pretty close. Okay, we're at 119.20. We've just poked through the 119 level on Friday. If we were taken out, okay, I'd look to sell back immediately through 118.80. 120 is a massive level. I just don't see that getting taken out. Of course, it could. If it got up towards 120, I'd sell any weakness whatsoever, okay, of the level. If we don't rally for fresh positions, you could come in through here, basically the lower Friday, and look for a quick move down to 117, and then I would add another position. Okay, so we've got one position in. We will look to add, on a break of 117. Plenty of downside in this pair. Basically, the just fundamentals are terrible. We saw last week a Eurozone GDP, and the media got all excited because it was 2%. That doesn't look like a great number to us. Look at the US, that's 6.5%. So triple the growth. And Eurozone is just not going to have a broad-based recovery. The weaker southern nations are just so weak. The ECB cannot give up stimulus. They have to support those weaker nations. Italy, Spain, Greece, Portugal, dire trouble. Okay, you have very uneven growth in the zone. So a little bit boring at the moment, but I expect the volatility to pick up. And just be aware, because when you have really low volatility, and it's the lowest volatility in a decade, that will be followed by higher volatility. When you get the volatility really drop, then we'll suddenly pick up. I do not think it's going to pick up to the upside. I think it'll pick up to the downside. So we shall see. Right, let's move on to our next pair that we really like, which is AUD USD. In terms of AUD USD, nice move down. I've got a good entry up at 77.80. So literally was back. No, it's back here. Sorry, we had to wait a little while for the drop, and then when the drop came, look at this 20-day moving average, the green line. Can't get through it. Come back to test it. Can't get through it. This one's got a long way to go on the downside. It kind of should have rallied, in our view, since June, because the fundamentals looked kind of bullish. You had very strong stock markets. The Aussie normally responds to them, and you had really, really strong commodity prices, but the Aussie couldn't get any upside. Okay, we're traveling sideways at the moment. If coming in fresh, I'd just sell through 73. Okay, I haven't drawn the line in, but new daily low. Look for 70, then 65. Okay, so a long way to go on the downside if we're correct in our view. It's 340 odd pips to first target, and the second target is what's that? 800. No, it's a big trend, a bear trend. I think we're going lower. And if we look, let me just show you. Yeah, iron ore, huge bubble in our view. Massive rise since the back end of last year, more than doubled in price. And look, we stalled into this level here. We were saying at the time we couldn't find anyone who was bearish of iron ore. Everyone bullish, talking about supply and demand fundamentals, etc. Okay, being bullish, they're not. It's just a speculative bubble, and we're seeing it burst. And I think we're going to go a long way to the downside, to 160, then 120. That's really going to weigh on the Aussie because it is the major export of Australia. And this graph I got today, a member posted it in the Facebook group. I think it's really good. Iron ore, okay, in terms of revenue. And then all the other exports, including iron ore. Iron ore is the only export that has really motored to the upside. The others have gone to the downside. It's well over 50% of Aussie export revenue. If it goes down, that is really bad news for the Aussie, and we think it's going to go a long way to the downside. And the Aussie couldn't rally when iron ore was strong. If it weakens, then we're going to see more downside. Just one final chart. People might think my 120 level was a bit ambitious. Look at this. This is another bubble. It's lumber. Got above 1,500. You couldn't find any bears. Okay, everyone was bullish. Look at it. Came down to 500. Iron ore will do the same. Speculative bubble. They'll get taken out. So very bearish of the Aussie. Now, if we were to be taken out, okay, through this 20-day moving average, we've got good profit. So our stop is tight. You can see it. 74.80 will lock us 300 pips. Okay. We just sell back through the 74 level. We got above 175 or 75. We look to come off that level. It's got limited upside in our view. A lot of downside if we don't rally higher, just through the round number. Nice, well-established downtrend. We'll see if it continues. Right, next pair. USD CAD. This was a favourite of ours for many months, and we've had a decent correction, and we are underwater on this trade. Got a great move up from the 120 level. Recent correction though, big one, 128 down to 124.69. So you've got about 340 pips, haven't you? We sliced this 20-day moving average, okay, which had been supporting price since June. You can see it supported there, okay. Doesn't support it here. Comes through. We'll just come back through the 20-day moving average with an extra trade. We've already got one in, and I will double up. Okay, I think we're going up to chart highs, then 130. Okay, now in terms of the Canadian dollar, I think commodity prices are going to be coming down, and I think the market is just too bullish on the CAD. We'll see. I mean, if we did drop lower, we would get stopped out actually if we went through 124.20. I'll probably look to come back in through 124 with the stop behind 123. So they're our three favourites in the majors. Let's look at a few lesser looked at pairs in the USD and then look at some JPY pairs. Right, we are on USD CHF. Now, in terms of this pair, for regular viewers, we had a nice long trade and then we got stopped out. It was a really decent profit. Then we tried to go long again on this move up here, and then we got stopped out, a smaller loss, and then we ran on to the downside. Dollar is now oversold. It's outside of that outer Bollinger Band. And we very often, when you fall outside of an outer Bollinger Band or go above it, we like to come buy back within it. Okay, so I'm going to give it a little bit of room to the 91 level. So actually I made a mistake here. I put 90.30 on my chart. It should be 91.30. Of course, I'll correct that when I finish the video. Stop at 90.10. Tight stop just behind the support level. So we're looking for it to break and then gravitate back to chart highs. If we're right, it's a really good risk to reward trade. So I view the dip as a buying opportunity. If we fall lower towards the 90 level, I'll just reset entry or lower my long entry. Now, a pair I really like, I didn't cover it last week, is USD NOK. Now, the USD, if the euro is going down on the USD, the proxies very often go down quicker. And obviously, we're heavily bearish of the euro. And you can see the USD had a really big run to the upside. Okay. And then we have the correction back within the outer Bollinger Band. We were stopped out. And then we find support here. We slice this 20-day moving average, which had basically supported price in this uptrend. I just want to come back through it. Yeah, big trend is up. The dip looks like a buying opportunity. Looking to get to 910 and then onto the big monthly resistance at 950. Now, in terms of USD, when it was rising here, crude oil was really strong. It's another big fundamental for the Norwegian krona. Obviously, Norway is Europe's biggest oil exporter. It couldn't gain strength when crude oil was going up. The USD was hitting it hard. I think crude oil is going to come down. If it does, that'll give the USD additional strength. Okay, so we just want a move back above the 880 level. At the open, we don't want it to go through the high, just away from the moving average 20-day, and then we'll go long. Really like the look at this pair from a risk to reward standpoint. Right, we're on USD PLN, which is another euro proxy, obviously the Polish zloty. I do quite like the USD against the CZK, which I looked at last week, and also the SEK. But I think with the Norwegian krona, I think this one kind of the best two of the four, basically. A great run up. We did get stopped out. We sliced the 20-day moving average, okay? 20-day moving average at held price until that drop on Thursday. Steadied up here above double trend line support. Just buy back through the level, okay? So buy back above the 20-day moving average. Chart highs, then 420, which is way up here. Just think Polish zloty, very, very exposed to Eurozone and global trade and the supply chains that have been hurt. I just think the USD going way higher. Really like the look at this from a risk to reward point of view. Right, last two USD pairs we're going to look at are two exotics or emerging market currencies. And then the first one is USD MXN. This has been actually a trade that has frustrated us because can't really do anything other than chop sideways. We took a breakout here, turned out to be a false breakout. We got stopped out. But now we're steady on double trend line support, blue. We're through the 20-day moving average. I'm going to put a small trade in above 20 and then look for a big blue follow through and add on to that trade. Okay, speculators heavily short of the USD. If the USD mounts a broad-based rally, the MXN should get hit hard. So should other emerging market currencies. So I've got targets of 2060, then 21. It's a very volatile pair. You only need a small position. Now, in terms of USD MXN being a bit frustrating, the next one actually has been a bit kinder to us. It's USD ZAR. Been bullish since the break of the 20-day moving average back here. Found support. Really nice move up. Get outside of the outer Bollinger Band, reverse back. Then we got stopped out. But then we came in with an aggressive entry. Found support at the 20-day moving average. We're just little, well, we're just not too far from our entry at the moment. If we get through the high of the day, then we should gravitate up to chart highs, and I'm looking for weekly resistance at 16, which is way off the top of my chart. Okay, South Africa, a lot of problems, geopolitical problems, internal problems, which you've seen. It relies heavily on dollar funding. So does the USD, or so does the MXN. Okay, and obviously we're looking for stimulus to get cut back quicker than the market expected. So I view the dip as a buying opportunity, and yeah, USD. That completes the pairs I'm going to look at. Yeah, I just view last week's price action as kind of a normal correction. Okay, so we shall see. But yeah, they're my favourite pairs. So then let's shift over and look at some yen pairs. Right, so we are on the first yen pair that we like, and we like three in particular. This one is Euro JPY. Now, in terms of the price action, it is a nice strong downtrend. Break the 20-day moving average, try and get above it, down, touch it, down. Bit oversold down here, come back up, get through it, but can't close above it. Okay, obviously we're extremely bearish of the euro. We think in terms of the yen generally, if you look at the COT net traders position, speculators are still heavily short of the yen in historical terms. So we expect the speculators to get taken out on stop and give the yen strength. Now, in terms of this one, easy one to play in our view, I would sell back through this trend line here, through that low. You see my level on the left, 129.80. We should go down to 128 and then 126. So hopefully 400 pips more to the downside. We've only got a minor profit on this trade. It's our second trade in the pair. I'm hoping it's going to become a lot more. What if we break higher? Our stop isn't too far away. You can see it's 130.80. If we break up, I would just sell back through the 20-day moving average and look for prices to top out into 131. You can put the stop behind 131 then. Okay. But if we were to break the 131 level, 132, I haven't drawn the level in. That's a big resistance level to take out. Sell back through 131, stop behind 132. So she rallies, look to sell. If she falls, I think she's a sell. Okay, so yeah, we'll see. I mean, the euro, like you saw in Euro USD, we haven't seen too much price action. This rally looks fairly laboured, you know. It's 100 pips in what, about 10 days, isn't it? Just feel we're going to top out. We shall see. Next pair. This is AUD JPY, and we've just noted that we're really bearish of the AUD. And you break the 20, come back to it, briefly through it, down, trying to get back to it, and looking weak. Got a reasonable profit in this one, and I'm hoping we're going to get some more. I view it as a sell through 80. You can just put your stop back behind 81 for fresh positions. Looking for a move down to big weekly support at 77.50. If we did break higher, let's say we were stopped out, we just look for the 82 level to hold and come back in through the 20-day moving average. Just so like the 20-day moving average. Yep, Aussie for us. This looks a big bear trend. I think it's got further to run. Last pair we're going to look at is CAD JPY. Now, in terms of this one, we did have a nice short trade in it, decent profit. We're now back in, and we're 30 pips underwater. Fall down hard. Outside of the outer Bollinger Band, we come back within, back to the mid band, just really coming back to the mean price in our view, and we're stalling. Okay, I would just basically look to come in through this low here. See my level on the left, 87.60. Okay, and plenty of downside in this one. Speculators heavily long. I think we should get down to 84 with a possible run on to 82. Can't just generally very overbought. If we were to break higher, we were stopped out, we'd just sell back through the 20-day moving average or come off the 89 level if we had weakness up there. Okay, So yeah, they're the three yen pairs that we really like. Last week I looked at GBP pairs. Don't have too much exposure in the GBP at the moment. I'll be looking for the Bank of England on Thursday, okay, to put some size in there. I might do a video on the Bank of England and the pound pairs then, but they're the pairs that we like. Basically, June and July, really, really good trading months overall. Hopefully August is going to be another good trading month. Obviously, we shall see. There are views at this moment in time. So, thank you very much for watching this video. Have a good trading week. Take care, and we'll be back next week with another forecast.